NIO is finally picking up some speed and has been up nearly 30% since they released their second quarter numbers. I am not a financial advisor, just a passionate NIO stock owner, but I recommended buying NIO last week at just $17 per share. Some analysts have strengthened their longtime beliefs in NIO and have updated their prediction. Before we look at them, let's just look at the NIO's second quarter numbers. NIO reported an earnings per share loss at $1.35, which was below analyst estimates. However, revenue showed $1.49 billion, beating the expectations of an estimate of $1.41 billion. For quarter 3, NIO expects between 31,000 and 33,000 deliveries, which would imply between 10,300 and 12,300 deliveries in September. Cash at quarter end was $8.1 billion, down slightly from $8.4 billion last quarter. NIO said that they were affected by cost volatilities as they and their suppliers struggled to keep production running through COVID shutdowns in April and May. Without shutdowns, they would have delivered much better numbers. Edison Yu, an analyst at Deutsche Bank, thinks NIO has a chance to become the industry leader among electric vehicle startups for 2 reasons. Given the positive response from customers and NIO's attempts to increase production to meet demand, Yu believes the company's ET5 sedan will quickly become a bestseller among luxury EVs. NIO will deliver the first batch of its mid-size sedan, the ET5, on September 30th. NIO has reportedly received nearly 200,000 pre-orders for the sedan, according to the China-based new energy vehicle website CNEV Post. Local Chinese media has even compared the frenzy in ET5 orders with that of Tesla's Model 3 when it was first delivered in China in early 2020. Second, Yu is optimistic about NIO's future because of its consistently high sales of previous models. According to Yu, NIO's existing goods continue to record consistent sales, suggesting strong brand strength and service. Despite being older and more costly models, NIO is now focusing on low and mid-range automobiles with a mass market brand in the works as well. To put that in context, NIO shipped 25,059 EVs in the second quarter. Even though NIO's premium ET7 sedan, the first of which was delivered in March, accounted for 1/4 of the company's sales volume, the remaining 3 models were all introduced by NIO between 2017 and 2020. Yu recommended NIO as the best Chinese EV stock and predicted a $39 price for each share. Bank of America analyst Ming-Sun Lee raised his price target to $30 from $29. Lee notes that after NIO launched the ES7, orders for the ES8, ES6, and EC6 models did not slow down. Another positive analyst is Yin Xin-Chi from CITIC Securities. He stated that due to the coronavirus pandemic and lockdowns in China, we will lower our prediction for 2022 deliveries to 150,000 EVs, down from 170,000. For 2023 through 2024, Xin-Chi expects between 300,000 and 500,000 deliveries. He also points out that NIO's deliveries next year will be similar to Tesla's deliveries between 2016 and 2018. That was the analyst, all of them positive about NIO. There are 2 things that makes me positive. The first is, of course, the potential market size of the EV market. Bloomberg projects that EV market could soar to $46 trillion by 2040. In 2021, it was valued at around $170 billion. It's still early to invest in the EV market, and EVs are going to be the preferred vehicle in the world. EVs recently passed the tipping point for mass adoption, and some analysts believe it could follow the same adoption rate that put the cell phone in every man, woman, and child's pocket. The new Inflation Reduction Act incentivizes EV adoption by giving $7,500 tax credit to all new EV buyers. In July, the global electric car sales were up 61% compared to 2021. In China, sales were up 112% compared to 2021. The EV megatrend is getting ready to experience a growth unlike anything we have seen, and every investor should bunk up with EV shares if they can afford it. The other thing that makes me positive about EV stocks and NIO especially is their recent sale numbers in China. In 2022, more than 60% of all EVs sold in the world are being sold in China. NIO sales in China has been up tremendously year over year. From January through August of 2022, their sales were up 28% compared to 2021. In August alone, sales were up with an impressive 82% rise since August 2021. The government in China has also halved vehicle purchase tax to 5% from 10% until the end of 2022. They do this to help the auto industry recover from all the lockdowns and production shutdowns. As NIO's deliveries and sales increase, their closest competitors in China, Xpeng and Li Auto, are suffering. Both companies had a drop in deliveries in August. There are also other positive signs from NIO. They are coming to the US. Check out the video I made about that topic. You will find the link in the description below. Another positive sign is their business strategy, where they offer customers to buy cars without a battery. If you haven't seen that video, I highly recommend it. And of course, you'll find the link in the description below. Let's round up for today. NIO is up almost 30% after they released their second quarter numbers last week. Analysts are positive. I am positive. You should be positive. That was all. Check out the videos I mentioned earlier, and I wish you a great day.